Hello and welcome to The Bottom Line on TVP World. This is where we unpack some of the main business and economic stories of the day. I'm your host, Marie Cato. 52%, that's how much profits soared in 2024 in Polish banks, according to Statistics Poland. The question is it a one-off or are the banks in Poland riding a wave? Let's see what the numbers tell us in Jan Kennedy's report.
Over the past few years, the Polish banking sector has had reasons to celebrate. In 2024 alone, the sector's net profits rose to nearly €10 billion, over 50% more than in 2023.
What currently benefits banks the most is the high interest rate environment. Net interest margins are at their historic peak. However, regulatory costs pose a significant challenge. By regulatory costs, I mean reserves for Swiss-franc loans, the bank tax, standard corporate income tax, and other financial burdens, which remain at record levels.
Mortgages denominated in Swiss francs were popular in Poland between 2005 and 2015, but many of them included abusive terms. Customers began to sue, and once banks started losing, they had to build a financial pillow to cover the risk. So between 2019 and 2024, Polish banks set aside around €20.5 billion. To date, around half of this amount has been reimbursed to creditors. While additional costs could rise by another €2.5 billion this year, the vice president of PKO Bank Polski, the bank that has issued the largest shares of franc-denominated loans, remains hopeful that the matter will soon be resolved.
We hope that the Swiss franc saga has largely been addressed. We anticipate taking further steps this year, but our goal is to start off 2026 with a clean slate regarding franc-related risk mitigation.
Equity analysts argue that the financial strain of the Swiss franc loans turmoil has effectively offset the profits banks have gained from high interest rates.
The positive impact of high interest rates is significant, but it is entirely counterbalanced by regulatory costs, primarily those related to Swiss franc loans. If we combine these two factors, they roughly balance out over the past decade, leaving the return on capital at around the same level as it was 15 years ago, at 15%.
A high interest rate Eldorado may soon be coming to an end, with Polish Central Bank Governor Adam Glapiński hinting the rate cuts are on the horizon.
A rate cut could happen in May, June, or July. I believe an adjustment is necessary, though whether it'll be large or small depends on the data.
Meanwhile, the stock market has reacted, with the Warsaw Stock Exchange's WIG Banki index dropping by approximately 8% as of Friday afternoon.
A rate cut will have a negative short-term impact on banks' earnings. Banks are highly sensitive to interest rates and can offset some of the losses through increased lending volumes. However, building loan volumes takes time. Currently, the sector's net interest margin is close to 4%. If it returns to historical levels, closer to 3%, about a quarter of the sector's interest income would disappear in a short time period.
With the Swiss franc saga coming to an end, Stolarski remains optimistic the situation will improve in the next couple of years, even in the face of lower interest rates.
So in recent years, the Polish banking system has been tainted by the Swiss franc loan saga mentioned in Jan Kennedy's report. Now that most of these cases are drawing to a close, perhaps Polish banking can open a new chapter for itself. I'm now joined by Michael Wodzicki, partner at PWC Strategy, and to tell us the latest about the Polish banking system. Hello, and thank you for joining us today.
Hello.
So let's start with the fact that Polish banks have done pretty well for themselves in 2024. What would you ascribe this to? Is it down to just the interest rates, or is there more to it?
No, I think first and foremost, Polish banks are efficient and well run. And over a period before interest rates went up, Polish banks had to deal with a low interest rate environment, which forced them in a low profitability environment, plus a lot of regulation and taxes. And this forced them to be very efficient in their operations. And then when interest rates started to rise in 2022 and to the current level we have now, this created an extra level of income for banks, which creates the current situation of higher profitability for the sector.
Oh, efficient. Okay. Yeah. But do you think that this level of profits can actually be sustained from 2023 to 2024? We see a 50% increase level, but the Monetary Policy Council is inclined to drop those interest rates in May.
Yeah, no, I don't think they will be sustainable as interest rates fall and are expected to fall. We'll see a positive, hopefully, situation where banks are able to give more credit, because that's, as the interest rates go down, the volume of credits will go up. But that won't probably offset the loss in money the banks are making, margin they're making on current deposits. So yeah, going forward, banks will be less profitable than they are currently. But please remember, in general, or please if I could mention, for a long period, Polish banks had a very difficult time with profitability. They were performing much worse than their European peers in Central Europe. Better than a few other markets within the European Union, but in general below the average. So the sector wasn't considered and is not, if you look over a 10-year period, is not particularly attractive or
not a
profitable.
Player.
No, definitely not.
But moving forward, or maybe let's start with now moving forward, how would you assess Polish banks vis-a-vis banks in the Central and Eastern European region, and also vis-a-vis other big global players?
Yeah, I think, again, Polish banks are very strong, very efficient, digitally, so technologically very advanced. And I think as Poles and Poland should be extremely proud of this sector. It's really, I would say, a world-beating global sector. So it's an example of a sector where Poland is admired around the world. I traveled to Singapore, last week was in the Middle East, in the US. People know about the Polish banking sector, look at it and say, you know, what can we learn from that sector? And I think that's very positive, and I would hope that going forward, actually there'd be initiatives where the role of the financial sector in Poland could even grow. Yeah, because there aren't many other sectors or any other sectors where you could say that about when you think about Poland and how it competes.
But it's not a very large sector per se in terms of like how much of the population it can potentially employ. I mean, you can't really compare it to London, let's say, that is associated with being such a, a financial hub.
Yeah. Well, it currently employs about 150,000 people directly in the Polish banking sector. There's another 150, maybe up to 200,000 people working in outsourcing, shared service centers, so in Poland for banks abroad, so working for American banks, Western European banks, for Asian banks. So there's twice as many people working for other banks, which creates a very large talent pool of people which are available in the sector. In general, people in the finance sector do make more money because it demands longer working times, a lot of risk that they need to take, a lot of stress, education. So the kind of impact of that sector is higher than you would expect from other sectors. Therefore, exactly, when you think of successful cities around the world, you think, New York, London, Hong Kong, Singapore, Frankfurt, these are all rich, aspiring cities that we look to. Well, what brings them all together, what's the common element there, is a strong financial sector. And my wish and hope for Poland and for Warsaw would be that Warsaw actually becomes the financial hub of Europe. And I think, given what you mentioned, Brexit, and that London is no longer part of the European Union, Europe is actually searching for a city, place to take the part that London played to date, at least partially. And I think Warsaw has a argument of why it could play a significant role in that. It has a lot of advantages over Frankfurt, over Amsterdam, over Paris, over Stockholm. And it's those things I mentioned earlier. A really efficient high technology in the banking sector, very strong people who are admired around the world. And I think building upon that base, we could create together here. Yeah, fill that gap that London has left here. Yeah. And we're at a lower price point than those other cities. And I think this is a huge opportunity, which I would hope and encourage regulators, government to invest in. Let's make a new London in Warsaw.
Definitely. But moving on to a bit of a saga from a few years ago that carries on to now, the Swiss franc crisis here in Poland. You know, when we mention that here in Poland, everyone knows what we're referring to, but not necessarily international viewers. Can you tell us that story in a nutshell?
Sure. So in about the 2000s, interest rates in Switzerland were very, very low. Okay, and they have been for many years. And Polish banks, and that was compared to the Polish zloty, where interest rates were higher. Polish currency was also quite strong and strengthening. And so banks came upon an idea to issue loans in Swiss francs. And that at that time was a very economically looked like a sound decision to make because essentially the interest rates were very low. So the money you were paying in to pay off the loan was going directly to pay off the loan. What changed, and as a result of that, about 40% of mortgage loans in Poland were issued as Swiss currency account, or as in the Swiss currency. What changed is a financial crisis in 2008, 2009, where the Swiss franc increased in value dramatically. And this meant that, vis-a-vis the Polish zloty, and so it meant that the customers who had taken loans in Swiss francs suddenly had to pay more in Polish zlotys. In Swiss francs, it remained the same, but just in zlotys. And that created a crisis because their earnings and their living was here in Poland, not in Switzerland. And that's what we're dealing with. Currently, when I fast forward now, I think the last Swiss franc loan was probably sold in 2009, maybe 10. So it's a problem it has taken 15 years to resolve. But it seems like we're close to resolving that. And as I heard from the previous speaker, by end of this year, we should.
That's right. Yeah, we're slowly coming to an end of this mortgage saga. We've actually seen a quote from one of the executives from the biggest Polish bank, PKO BP. Can we perhaps get it up on our screens? I'm going to read this quote. We hope that the Swiss franc saga has largely been addressed. We anticipate taking further steps this year, but our goal is to start off 2026 with a clean slate regarding franc-related risk mitigation. In your view, how well have Polish banks actually handled the problem? It's taken a very long time.
It's easy to criticize someone looking back with hindsight, right? So I think, they could have done it better and differently and faster. And I think here, potentially the government could have stepped in, as the government did step in Hungary and other countries, Croatia, that legislated the resolution. At the time, I think the perspective of the Polish legislator and regulator was, okay, it's only 35 to 40% of the mortgage loans. Let the market deal with it. And then to your question, how did the market deal with it? I think it could have resolved it faster. If they had known what was coming and that the expenses this would cause even 15 years later, I think they would have had a very different attitude at the time. I think they just tried to ride the wave and let things happen to them rather than deciding how things should go. Directing things. And it's ended up costing them a lot of money. And even now we're still talking about a topic that really was created 25 years ago. It started being created, but became a real issue about 15 years ago.
But had this not happened, because it's essentially considered a bit of a disaster, how well do you think the Polish banking industry would have been able to develop? Like, where would it be now? Did it get in the way of actually conducting business and profiting?
It did, yes. So it's a great question. And please remember, not all Polish banks issued loans in Swiss francs. So there were banks that looked at the idea of lending in Swiss francs and said, well, that's currency speculation. Okay, it's irresponsible to have someone who's earning money in Polish zloty pay off a large loan in a country, in a foreign currency in a country far, far away, with really disconnected from Poland, with very different geopolitical situation and a very different monetary policy. And those banks looked at that and said, that's irresponsible. By the way, we've seen that mistake happen before, namely in Italy and in Holland and other places. And no, we're not going to lend into Swiss francs. And so they didn't do it. And that was specifically PWC, which was owned by UniCredit. So their Italian owners said no. And to a large extent, ING Bank Śląski, so owned by Dutch, basically investors, said no, we're not entering that market. And I think those two banks not participating in the Swiss franc lending, in a way, helped save the Polish banking market, because we could have found ourselves in a much worse situation if they hadn't made those decisions. Other banks, both Polish and foreign, decided to go forward and issue those loans.
So it was possible to assess the situation differently?
It was, definitely. And there's examples of banks that made very, very difficult management decisions to not do it when everybody was doing it and people were making a lot of money doing it, to make a management decision saying, no, this is not in the interest of our customers, it's not in the interest of ourselves, and it's not in the interest of the country. And so kudos to those managers who made those decisions back then.
Absolutely.
But yes, the Swiss francs and the problem with them did was an anchor around the neck of Polish banking for. So it's good that it's coming to a close.
Finally, yeah. But moving into the future, we've heard some members of the Polish government suggesting there should be an additional tax on the bank's profits. Namely, we have a quote from Katarzyna Pełczyńska-Nałęcz. We're just going to see a visual here. The Polish Minister of Development Funds and Regional Policy, and she says, if banks get richer at the people's expense, then in these hard times, this money should be used for important purposes like defense or health. What are your thoughts on that?
Well, I think it's foolish and short-sighted, to be honest. Poland currently has, it's estimated, the highest tax rate on banks in Europe, okay, at about 40%. This is the effective tax rate. And then adding to that, there's a sector which is really one of our gems, one of the most successful sectors to have developed in the market, one that's globally recognized, I think is, as I said, foolish and short-sighted. And I actually think we should do everything to develop the sector further, to encourage even more investment in the sector, encourage investors from abroad to come here, set up their banks here, not in Lithuania as Revolut did, not in Belgium as Ion did, but to look to Warsaw as a place, and it'll bring more money. If we raise taxes, the best way to kill a sector, if you want to destroy something, do two things: tax it and over-regulate it. And unfortunately, we're sort of in that situation. We are in that situation in the banking sector. We're overtaxing it and we're definitely over-regulating it. And I think it's time for those two to stop if we want to build a strong financial sector and a strong Poland.
Definitely, that makes sense. Michael Wodzicki, partner at PWC Strategy. And I'd love to keep you for longer, but we're going to have to pause our conversation there. Thank you for coming.
Thank you very much. Thank you.
And that wraps up the bottom line for this week. I was your host, Marie Casey. We'll be back on Monday at 5:10 CET on TVP World. In the meantime, for the latest in regional business, follow us on X and on tvpworld.com. And for more news and analysis, stay with us on TVP World. Goodbye.